Hey everyone, this is Tim Dial. Just wanted to give you a quick market update based on what we're seeing going on today. This is going to be an extremely volatile week with the election happening tomorrow. Of course, those results may not be in for a few days. It took 4 days last time, so before the results were completed, I guess, or a decision was made there. So, but this is going to be a very volatile week because tomorrow's the election. Then the next few days, trying to figure out who won, and then also on Thursday, there's a Fed meeting, and the Fed is likely to have another 25 basis point rate cut to the Fed funds rate, which is going to cause some volatility there. Everyone right now they're about 98%. They think that the Fed's going to do 25 basis points. That's pretty much the consensus, but that's not really the important part because that's already probably priced into the market since it's 98%. So what's more important is what Jerome Powell says after the meeting. Depending on what he says, that's going to impact the markets. So just as an example, if he talks about inflation continuing to come down to their 2% goal, then that's going to help the markets and help interest rates. If he says inflation's a little hotter than they want it to be, they were hoping it would be lower by now or something like that, then that's going to hurt the markets. And then other things that can make an impact as well is if he talks about jobs. So if he talks about there was a job report a couple of weeks ago that was very strong, much stronger than expected, but then there was another jobs report that came out more recently that showed weak job numbers. So those two things are sort of in conflict. And the second report, some people are saying that they think that the job numbers were weak because of the hurricanes and people losing their job as a result of the hurricanes, which would be an outlier. But we don't really know that for sure. So it just depends on what he says. If he talks about the job market being really strong, and that's going to hurt interest rates. If he says the job market is not as strong as they would like, then that's going to help the markets. That's just kind of the way it works. So his comments are going to make a bigger impact on the markets than what the Fed actually does, because the Fed is assumed they're going to do 25 basis points, and that's already sort of baked in. So, but I wanted to go ahead and share my screen with you really quickly so we can go over a couple of things with the charts here. And all right, so you should be able to see my screen. This is the 30-year mortgage bond. When this goes down, that means rates are going up. When this goes up, rates are going down. As you can see, we've had a nice bump up today after this long trend of going down, meaning the rates are going up, right? So this is the rates are going up here, and then we had a nice little bump today ahead of the election. And there's a lot of speculation as to why that is. Some of the speculation is that this trend here was caused because the markets were expecting a Trump victory, and if that were to happen, tariffs are inflationary, and they thought high inflation would cause rates to go up, so they were baking that in. Now it's become much more likely with some polling over the last couple of days that Harris could potentially win. So you're seeing the markets bounce back a little bit from that news. That's the speculation. I don't know that for a fact, but anyway, that's kind of what we're looking at here. And then if you look at the 10-year, it kind of moves the opposite way. So if you're looking at the 10-year, when the 10-year goes up, that means rates are going up. When the 10-year comes down, rates are coming down. As you can see, this bounced down today below this level. So that's good for markets. We hope this trend continues so we can get back down to these levels that we were at in mid-September. And I really think that that's going to continue. For some reason, there's an October effect almost every year where rates go up in October and then they'll come back down in November and December. It's hard to say why that is. I do know that a lot of times there's an election that happens in November, so maybe that volatility of the election is what causes that bounce. But it's just hard to really say. But yeah, we are expecting this trend to continue, hopefully. But these factors that happen this week are going to make an impact. What happens in the election over the next few days, and then also what Jerome Powell says after the Fed meeting is going to make a big impact for sure. And what he says, his comments usually make an impact for weeks. So So it could definitely be important. And then the Fed's going to have another meeting in December, and they're expected to make another cut in December, probably another 25. And then, of course, what he says in December is going to make an impact as well. So anyway, that's a little bit about how all of that works. If you look at this, there are a lot of articles like this right now. Why this week's Fed meeting might not matter as much as next year's. Experts predict a rate cut this week, but it won't bring much relief. And that's true. It's already kind of baked in. The Fed funds rate cut is already baked into what's going on in the markets. But what will make a difference is Jerome Powell's comments. So even though there are a lot of articles like this right now, what really matters is the comments that Powell makes, because when he talks, the markets listen. If that makes sense. So anyway, that's pretty much it. That's all I wanted to cover in this short video message. I'm continuing to track all of this stuff and make sure I do this hugely for refinance customers, because I want to make sure that we're not locking an interest rate for refinance customers at the wrong time. Once we get back to those September levels, and maybe even a little below that, then it's probably going to be a good time, because markets move up and down. So if we can get back down to that level, that'll be a good time probably to move forward and lock before the next bump up. So that's pretty much it. That's what I wanted to cover. And if you do have any questions or comments, certainly feel free to reach out to me. I'm always available. Thanks.